It was another good day for bonds here in the U.S. as investors sought safety in U.S. fixed income assets. There are a lot of reasons for that, and much of that has to do with the same stories that have been making headlines over the past few months, over the past year. Basically, in the latest developments, it seems like President Trump confirms that he won't be meeting with Chinese Premier Xi before the March 1st trade talks deadline. And that basically tells us that the talks aren't going well, and so it's making investors nervous that China will be slapped with another round of tariffs, leading to kind of ongoing strain on the Chinese economy, as well as ongoing tensions, global tensions around the world. We also have renewed concerns in Europe and Australia. In the Eurozone, data has been terrible. In the UK, it seems like Prime Minister May went to Brussels to try to get the European Union to kind of amend some of the terms of the Brexit withdrawal agreement. It seems like they're playing hardball. They're not giving her any slack. And so investors see the risk of a no-deal Brexit growing by the day. So they're seeking safety in U.S. assets, U.S. bonds, driving yields lower and prices higher. Down under, we also have trouble with the Reserve Bank of Australia basically saying that the risks have shifted to the downside, and for a good reason, because they're worried about China, they're worried about the trade talks, and so far it definitely seems like the trade talks are not going well. So all of that is creating demand for U.S. bonds, and unfortunately it looks like things will continue to remain tense. It doesn't seem like there's any clear path forward or light at the end of the tunnel, and that's going to be good for bonds, and it's going to drive prices higher. I'm also seeing Fed fund futures show the market going from pricing a greater chance of a rate hike to now a greater chance of a rate cut by the end of the year. So that's also putting pressure on yields and driving prices higher. And I think the Federal Reserve stance has been made very clear, and that's really going to be something that we're focusing on as well. So the bond market and bond prices could continue to move higher over the coming weeks.